Hey everyone, it is Sunday, September 5th. I want to welcome you all to the start of what everybody out there is calling the most bearish month in history. What everybody out there is calling for the worst ever month for bulls. And I'm starting you off with the image that I shared there on Friday of what the ideal bullish cycle view before the end of the world is pictured here. And it's that we eventually wind up there around that 5,500, 5,550 area for an ideal target to the upside to complete this cycle that we started back after the Great Depression. It's a very long and tedious story to go into, but yes, this does fit for somewhere in the next 18 to 36 months to that upside level. And again, just looking at your trend line that you've got over here coming off of your lows from COVID, this also does fit for a very supportive area, which we haven't even come down to as of now on this recent 3 week decline, which I'll cover in a minute when we go over that. Uh, Anyway, here you go. We are already into the third week after, if you remember, going back a month ago, I said I was going on a hunger strike. I was only going to drink water, eat my 6 hard boiled egg whites each day, and eating nothing other than that, only drinking water until we got at least a 5% decline. What happened the following week? We went up there, we hit that 43.25. And from 43.25, we've now had a 12 session decline down to that 39.0365 that we had there on Thursday. And it was almost 10%, a minus 9.75% decline. As you can see here, just going off your math numbers, we had almost a 19% rally, and now we've had a 9.7% decline. It was 688 points to the upside, 421 points to the downside, which makes it very, very simple to appreciate and just mathematically look that we've just basically come down to our 61.8 retracement of that entire rally, which again still leaves a lot of questions that nobody out there knows the truth to or the answer to until we actually see something occur. And that something is whether or not all of this decline has taken place and now we're due for a rally and heading up through 43.25, or if that 43.25 that we got, like I was saying, was created because of all the shorts that we had going into the end of June, and why it was such a frustrating rally after we started breaking up into levels that we shouldn't have. And now we're paying the price for it on this decline, which happened rather rapidly. 12 days, 9.75%. I mean, that's about as quick as you can get. And again, going here, we've now had 3 red weeks in a row, which I'm going to cover as well. And of those 3 red weeks that we've had, we've gone down 106 points the first week, 145 points last week, and only 160 points this week that we just concluded here. So, again, even though it does look like it is very horrible, these moves to the downside intra week are what we were used to getting over the course of a 1-2 day period. Granted, we did get a large move there on Friday because of that Gazprom bullshit headline that's hitting the markets. And now we're starting to get the follow through on that Gazprom that there is no leak, according to the Financial Times, that Russia said that they're cutting off gas to Europe until all the sanctions are lifted from the West. Tomato, tomato, it is what it is. But again, you've got to go through it and understand and appreciate that there are other methods and other ways that they can obviously survive through a winter where Gazprom and the Nord Stream pipeline were just turned on literally a year ago. So it is what it is. Anyway, I want to bring you here to start out and look at only your weekly. your weekly chart on the SPX. You can see here almost drawing yourself a line. I wish I had the drawing tools out here, but I turned them off. And what you are looking at there is a pretty well decline that we've got here. But again, 1, 2, 3. You've got 3 red weeks. Your full stochastics are blown out. Your money flow is not. So again, something to appreciate as to whether or not this was really a sell off or if it was, like I said, just basically the shorts that were covering because they were obviously exposed. Here you are on the NASDAQ, same thing. You've got a very large decline over here on your weekly RSI. 3 red weeks in a row, 1, 2, 3, boom, boom, boom. And again, blown out stochastics with the money flow over the last 5 weeks, not as negative as you would expect to see for such a large decline. Here again, here we are over onto the Dow Jones, 1, 2, 3 in a row, bam, bam, bam. Come over here, your full stochastics completely blown out, oversold. And again, your money flow not as negative as people would expect to see. And right there, as of now, holding right on that 33, 32 resistance. And that's what we'd be looking for to see that break out. IWM, again, 3 red weeks in a row, same thing. Full stochastics completely blown out. Money flow, not as negative as you would have expected it to be, but obviously on the decline. And what we'd want to see over here is something up above that 200 level. Over above that 200 level, we might start to get a little bit bullish. But as of now, that 200 level is going to remain that resistance part. And again, here on the VIX, you had a red week over there on the S&P and on all the other indexes, but the VIX also closed red for the week. Red weekly candle over here on the VIX, fully blown out, exposed, overbought over on the full stochastics. Weekly RSI, not something I would expect and appreciate, but again, fully oversold. Why I went into that hunger strike, do a decline. We got the decline. Here we are up here, and again, not something that I see as being as an aggressive bearish move on the markets, simply as we have never ever gotten into that 28 threshold. And it's still declining right now as I'm watching it. The VIX is down here at 26.13 with the European markets being open. So again, the bearish view, I question, I sincerely question it. And reasons, again, supporting why we are due a significant enough bounce. Come back onto the daily and come over here onto your big weights. Here's your Apple. Overexposed, blown out RSI on the daily, almost as bad as it was on the June lows. And as you can see here, dealing with Apple, this looks like a very clean 1, 2, 3 and a 4 here. ABC for your 4, 3 waves down. And now, boom, something to produce back up here into this 160, 165 level. From there, I would start to get a little bit bullish. Full stochastics blown out, money flow totally blown out. So again, money goes out. Only thing for it to do is to go back in. Microsoft, more oversold than, I'm not going to say it because I've got too much respect, but this is more oversold than a crack pipe in the Chicago suburbs in the 1980s. 8.87 over here on your RSI. You are blown out below blowout levels. Down over here on your full stochastics with a buy divergence, and again, blown out money flow. Microsoft, again, biggest weight, second, number 2 on the list. Again, one of those things that you're looking for, that you are going to be looking for something to appreciate and start heading up. Amazon, again, full stochastics, big recovery here into last week. Here we are over here with a blown out money flow. Again, same thing. And very, very, very strong coming off of those June, May lows. Still up here right at the 50 and 100-day crossing, which is bullish. Holding above that gap that it created from earnings still. And again, as long as we can hold above that 125, 126 level, we should expect to see Amazon to get back up into this 135, 137 area. come over onto Google. And again, Google with a buy divergence. But Google, like I was saying before, you got a really nice channel area where price is just turning. You've got this 105 area as your extreme bottom, and you've got this 120 level as your extreme top. Really fantastic from my point of view as to something to constantly be focused on in trading is that Google, even though I got into those 114 calls early, they blew out last week. I've still got 114 calls for this week. I give them very little hope. But again, here you're looking at it. The 50-day and the 100-day, very close to crossing over, which, again, from an algorithm point of view that has no emotions whatsoever, 50 crossing back over the 100-day would be bullish for that. And again, with everything being as oversold as it is and a positive money flow over here, I would be looking for Google to be bouncing. And again, being weighted, same thing. Tesla, same situation that you've got over here, extremely oversold, almost exactly as oversold as you were over here in May when you were coming down there into that June bottom, but very, very far off of that June bottom area. Again, holding here with a 50 and 100-day moving average crossover, bullish move on that. Again, I would be looking for Tesla to be testing that 200-day moving average up there around that 297, 300 level. And again, we can start to be extremely bullish when we start seeing Tesla closing up above 300. For now, it is what it is, but still, full stochastics, buy divergence, blown out money flow. So, yeah, we're looking for the upside. So, again, just coming back into something I've watched and looked at for years, and that is that we've just had 3 red weeks on the S&P. Doesn't mean that we are going to get an explosion to the upside like we had off the June 3 red weeks, having come off of one of the wildest and rarest algorithms where you get more than 4 consecutive weeks to the downside. We got 7. So, I shared that with you when we were back there in April and back there in May, the rarity going all the way back to the 1980s of how rare this is to happen. And this is where your shorts were created, this entire downside with all of these red weeks for what caused this upside here over in June. And now, because we've seen with the VIX, using the VIX, how we've seen such a lack of volatility to the downside, meaning that on the VIX, you're not seeing your calls and puts get extreme moves where everybody's buying puts. This 3 red weeks holding above that 38, 38.79, I still have to agree that the bulls do have a chance to defend the argument that the lows for the year are in. They're done. We hit them in June. That's it. It's over with. All that they're looking to do now is to survive September, get through a little bit of October, and after those midterm elections in November, you're looking at nothing but skyrockets November and December, which again, it does support Tom Lee's idea that, yeah, you could be looking at 4,500s into the end of the year. No question. No question whatsoever. New highs? I got doubts with that, but you would need something to take place over there in Russia where, look, if Russia just shut the fuck up and ended all this bullshit, put gas back on over there and made fucking money off of it, we're without a shadow of a doubt, we're at 4,500. No questions asked, we're at 4,500. Inflation disappeared. We're up at 4,500. You get something like that. What we're looking at here from a zoomed in point of view is how we hit that 200-day moving average perfectly back 3 weeks ago. And then from that, we just went for what is looking right now very clean for now as an a B, and a C wave to the downside, where we've come right down to the 61.8 retracement to the June lows. We've almost perfectly hit that 150 extension on this ABC downward. The 161 is still a little bit lower, and again, coming off of this rough period that we've got, wouldn't be out of the question to get a quick dip down lower. But what is a concern is how on Friday we went up there and we just went to hit that 50-day moving average, and then all of a sudden that news about Gazprom and everything came out, we sold off. So that's a very big question right there, because again, I don't know the answer and nobody else does. Nobody else does. But if that was our four, if that was our four, then there's absolutely no way to avoid it. We're going to be looking for a wave five somewhere down here, and it's not going to be pretty. It's not. It's not going to be pretty at all. There's going to be absolutely no way to get recovered off of it in a shorter period of time. But yeah, that's what we're looking at. Something down here in this 38, 37.90 area, in that range. And again, nobody nobody knows the answer to that until we get a break back up here above that 40.20, above this 40.50. Then we can start saying that this is completely off the table. It's done, it's over with, and now we can start looking for, again, something to get us back up into that upside level and testing that 4,200 and, again, that 4,300 level, where this 4,220, 4,200, that's going to be an issue that we're going to be taking advantage of if, again, this is completed and over with, those Friday fucking shenanigans that we got. So here's your NASDAQ. Again, on the NASDAQ, these are your legs. The NASDAQ are your legs. That's your strength. That's what you run off. You run off your legs. You can crawl with your left arm and your right arm, which is down the Russell, but the NASDAQ is your legs. The NASDAQ is not having a really nice time right here. Coming over here, I was looking at this as an ABC. We just broke above that 100 extension. It does look like it is a 5 waves down, which I can't. I got to remove that because it already went past where C was larger than that. So that is off the table. So we're definitely looking at an ABC for now. And if it doesn't work out to be an ABC, what we're looking at here would be a rejection right around this 12,500 area, which was a little bit shallow there on Friday. But then from there, we're heading back down here into this 11,500 area. Again, doesn't match to the weekly candle look. It doesn't match to those daily oversolds. But, when it comes down to all that, there's nothing you can do but let price give you the answer as to what's happening. But yeah, from the look of this right here, this does look like an ABC, and we're going to need to see this hold and get a break back up above that 12,400, which is around 304, 305 over on the QQQ. And that's what we're going to need to see. We're going to need to see this break back up there around that 304 level and get up into these gaps, because anything that we get down here below that big bull loss, we're in big trouble. But we've got a good support line down here, good trend lines that we're looking at down here below that. So there's a chance, all right, there's a chance that this is over with. But again, coming back over here onto the NASDAQ, looking at the cash chart on the NDX, you can see here where we're oversold. We're more oversold on the daily now than we were when we went into post that June low. All right, and just let that sink in just a little bit. We're more oversold on this NASDAQ daily now than when we posted that June low. So again, we could be in place for an insane rally, or we could just be looking at this 3 weeks of red getting reversed, getting a 1, 2, 3, like we had over here, going nowhere kind of thing off of the June lows, and then starting to make a move where all this does is basically cool everything off. But yeah, we are in a predicament for the moment. Again, big bullish view. This would be the greatest view that we could be looking at would be something up here around the 5500s going into the middle end of 2023. Where we're at for now, it is what it is. So we're going to have to let it all subside, and then we'll see what we get from there. And I hope this recording worked, because I'm pretty much done for now. So talk to you guys.